This week, I'm going to talk to you about 4 different things. First, the Alphabet/Google antitrust case. Secondly, Trump's tariffs, which a federal judge ruled many of those tariffs, or actually most of those tariffs, to be illegal. Thirdly, the 30-year U.S. Treasury bond, which has been going up in yield, and how its yield has been going up along with the yield of many other countries' 30-year bonds. Fourth, I'm going to give my thoughts on the price of gold, which hit an all-time high last night. First, the antitrust case. Judge Maida gave his remedy for Alphabet having been found guilty of abusing its monopoly position in search. And although some people had thought that Judge Maida would order Alphabet broken up or Alphabet to divest the Chrome search engine, Judge Maida's decision was much more moderate than that. And the reaction of Alphabet shares and after-hours trading, Judge Maida gave his decision after the market had closed, is it went up 7%. I find that a little bit surprising because I was in the camp and there were many people who argued that actually there was a lot of hidden value in Alphabet, and if it got broken up, it would actually reveal value and actually be good for shareholders. So finding out that it's not going to get broken up, I can't see why that makes the share go up 7%. The second kind of negative thing in his decision is his logic. Well, basically, the power that Alphabet had abused, its monopoly position in search, in Judge Maida's position, just wasn't there anymore because of AI. There are a lot of AI products. There's a lot of competition in large language modules, and a lot of things that people would go to Google search to find out or to use, now they can use these AI products. Therefore, Alphabet no longer has this super-duper strong market position, monopoly-type powers that it did before, and it doesn't need to be broken up because, well, it won't be able to abuse those positions anymore. It won't be able to abuse its strength because its strength is already greatly reduced. So that takes care of my view for Alphabet Google. And in the market tomorrow morning, I expect it to, or later today, Wednesday in the US, I expect Alphabet shares to open up because they were so strong after the close. But I wouldn't be surprised to see it sag during the day and not put in very strong gains at all. Secondly, now let's go to Trump's tariffs. Well, most of Trump's tariffs were put in place based on Trump basically saying that there was an economic emergency that required him to put those tariffs in place. And more or less, this is sort of a simplification, but a federal judge ruled there wasn't an emergency and therefore those tariffs are illegal. And he'll have to give back the money to all the US companies who paid those tariffs to import things. The market did not like that, which is a little bit interesting because up till now, kind of the mantra is that Trump announcing tariffs are bad for markets. Now all of a sudden you hear that some judge saying Trump's tariffs are illegal, and at least initially last night, the U.S. stock market was down by 1.5%. I think the S&P 500 finished down 0.7% on the day. So why did it happen? Why is the market all of a sudden like tariffs? Well, it's basically tariffs have worked out better than anyone expects. Trump was able to put in relatively large tariffs that are large enough that the revenue coming in has gone a long way to keep the U.S. Fiscal situation from deteriorating more, very quickly. Even with the tariffs, I guess the best way to say it, the U.S. Fiscal situation is deteriorating, but it's at a relatively slow pace. So the tariffs are a necessary part of financing the U.S. federal government. So the market likes that money's coming in. Previously, it was thought if you put tariffs in on that size, that this would cause a disaster for the economy. And of course, the market wouldn't like that. But as it is, the U.S. economy is continuing to chug along. The latest Atlanta Fed GDP Now forecast for the third quarter is for 3% growth. Maybe that number is a little too high, and as we get more data, that will come down. But still, the U.S. economy is growing, even though there's very large tariffs. That's a surprise. Part of the reason it worked out that way is other countries in the world didn't retaliate against the U.S. as many people would have expected for putting in those tariffs. So what's going to happen going forward? Well, Trump's going to appeal the tariffs to the Supreme Court. And it looks like, as far as the market is concerned, they would like it if the Supreme Court actually overturned the federal decision and said, no, those tariffs are legal. Should they affirm the decision and say the tariffs are legal, the president has other powers to institute tariffs, which Trump will obviously use to put the tariffs there, but then those new other powers he's using could also be challenged in the court. So you're going to have all kinds of uncertainty, and I think that's got to be very bad for the markets. So right now we have a big binary thing coming up, and it'll be many months into the future before we get the result, but we have a big binary thing coming up on whether the Supreme Court will say those tariffs are legal or not. And surprisingly, at least surprisingly, if you put ourselves in the shoes of what we were thinking about markets 12 months ago, surprisingly, the market wants to find out those tariffs get to stay. Finally, let me give you my thoughts on gold. Well, gold went up a bunch last night, and that probably is because gold likes uncertainty, and we have that tariff decision that brings in uncertainty. You have worries about the deficit, and of course, if you're worried about the deficit, you've got U.S. federal deficit, because of the lack of tariffs, you're going to be worried about the soundness of the U.S. dollar, and of course, gold. Of course, gold reacts favorably to that, and we're at an all-time high. Gold's really in a very strong bull market. Like that old expression, you don't want to stand in front of a freight train. But I would put this one cautionary thought on gold is the only way to analyze gold is to compare it to the price of other things. So sometimes people compare it to the cost of buying a new suit. Sometimes people compare it to the cost of silver or iron ore, or they compare it to the cost of buying a house in the United States. You can look at all those things, and gold looks to be very, very expensive. So if gold were to make a turn down, it's still going to look expensive. It's so expensive right now. And so you really have to, if you're buying gold, you really have to have a lot of confidence, because it's not going to be kind of situation where you'd say, oh, gold just dropped by 10%, now it looks cheap, I really want to buy it. It's not going to be like that. Let me finish off, kind of related to everything else I'm saying, is that last night, U.S. Treasury yields went up, and they went up the most on the long end. The 30-year bond is yielding about 5%. It was yielding 5% earlier in the year, so this is not like into totally unknown territory, but still that's very high. And when you think about it, it's almost 90 basis points higher than it was last year at this time, even though over the last 12 months, the Fed has cut interest rates 4 times for 100 basis points. So short-term rates are 100 basis points lower, but the 30-year bond yield is like 90 basis points higher, and we're expecting further cuts in short-term rates. So why are 30-year yields high? Well, I've already kind of discussed that with you. People, if you're loaning to the United States for 30 years, that's showing that you have some faith in the way the U.S. is going to be handling its, the U.S. government's got to be handling its finances, and with all this tariff uncertainty added to it, but generally with the U.S. running big deficits, there isn't that sort of certainty, and we've seen yields go up. And this is not solely a U.S. Problem. You can see that UK yields have gone up a lot. In fact, over the last month, the UK yields are up about 20 basis points. I think yields in France are up about 30 basis points over the last month. German yields are up, not nearly that much. Japanese yields are up quite a bit. Investors all over the world are worried about these countries and the way they're handling their affairs. It's just not a US story. And my thought is that this is going to be a backdrop to financial markets for some time going forward, because we're not seeing governments anywhere in the world really address their fiscal problems. So you're going to have higher long-term yields, and any spikes in those yields, yeah, that's the sort of thing that'll create trouble for the equity market. Anyhow, I've given you a rundown on those 4 topics. I hope that's helpful for you.